Hello and welcome to the latest Value the Markets shareholder webinar. Today we're joined by Scott Moore, CEO of EuroSun Mining. EuroSun has one of Europe's most exciting gold development projects and has recently raised quite substantial funds to take its project through to production. Today we'll be hearing a short presentation from Scott, who will talk us through both recent developments with the company as well as catalysts for growth over the next 12 months. We've then received a number of questions in advance of this webinar, both from shareholders and interested potential investors. So Scott and I will have a question and answer session to take us through to the end. So Scott, welcome today.
Thank you very much for having me today, Ben. Sure, well, jump right into it. So what we have here is the Rovina Valley project in Romania, and we certainly described as Romania's next gold and copper mine. Just jump to the next slide. So what we have here is an advanced 10 billion ounce project in the European Union, properly in Romania. We're developing a large scale bulk tonnage open pit mine, long production life profile. So we're targeting 20 plus years at Rovina. We have significant leverage to gold and to copper prices. We talk about 10 million ounces of gold equivalent. It's about 7 million ounces of gold and about 1.5 billion pounds of copper. Those are all measured and indicated. There's virtually no inferred resources in the project. It's been considerably well drilled out. Importantly, it has a mining license already granted to it and ratified by the Romanian state in November 2018, valid for 20 years and renewable in 5-year increments beyond that. So that was I would say a massive de-risking event for the project. It's in a past producing region. There was a mine in town for many, many years, almost 80 years, right beside our project. So all the infrastructure in place for that past mine was there: roads, towns, about 15,000 people live in the town of Brad, rail, power, paved access. This is building a mine in first world jurisdiction, not in the Altiplano of Chile or Peru at 5,000 meters with no water or power. And a couple of really strong, I would say, the final de-risking steps of the project, which is completion of our urbanization certificate, which is essentially our construction permit, and our bankable feasibility study to be targeted to be complete by the end of the year. And again, hope to be in the ground in the early spring of 2021. Next slide. Capital structure is, again, an important part of the project. We have about 169 million shares outstanding. More importantly, our institutional shareholder base is roughly 30% plus in the project, held by some of the largest and most respected gold funds globally. Market cap is only $100 million, so roughly 10 million ounces at $10 an ounce is $100 million. So still quite inexpensive. Liquidity is excellent. We trade almost 2 million shares a day, every day, in the last 30-day volume. So highly liquid stock for the size of the market. And we have approximately 50 million warrants outstanding, and virtually all of them in the money right now. So that will bring in roughly $25 million of future capital in the project. So well-funded project. It's had its breakout. We've had the institutional shareholders jump in, and I think we're well-funded right through to that construction decision. We can jump to the next slide. Just talk about where we are. So, these deposits, Rovina, Kolnik, and Chirasata. Kolnik and Rovina are two open pitable assets at surface. Chirasata would be an underground development project, a large-scale bulk block cave. We're not going to target that one at the moment, but just to give you a sense of scale, these projects or these independent deposits are only about 2 to 3 kilometers apart. So very easy to bring in a centralized plant. If you locate there, a proposed plant location right near the Kolnik deposit. The town of Brad, again, only about 5 kilometers away. Railhead, power lines, power plants, hydroelectric dams. If you look at, social license, the town of Brad, its sign in that little picture in the bottom corner is a mine cart and a portal. So, this is a mining jurisdiction. We don't have to, explain how mining brings prosperity to local communities. They've experienced it and they want it back. If you look at the next slide. Certainly, there's been a lot of discussions around mining and ESG principles, which is environmental, social, and governance best practices. And really, that's been the key in getting this project approved and moved ahead in Romania, whereas other projects, most notably the Roja Montana project, was unable to move forward, mainly because of, I would say, two things. We don't use wet tailings. Romania has had a history of a couple of wet tailing dam failures in the past, around 2000. The year 2000 and such, moving towards a dry stack tailing system, which is leading edge in terms of how we move things. Long-term environmental liabilities are severely limited by dry stacking. You're not leaving a legacy wet tailings pond for 50 years after you're done mining. So no risk of dam failure, minimizes water usage. So it certainly is the best practices. And secondly, zero cyanide. So we don't use cyanide anywhere in our system. It's a simple copper concentrate that we produce, which we ship to smelters either locally or into the international market. We have no Roman ruins, our archaeological discharge certificates in place, and no relocation of towns. We're actually outside of town in a somewhat state forested, lightly pastoral area. So we have no relocation of people to worry about, and a minimized footprint based on the already utilizing the existing infrastructure in and around the town of Brad. So, from how we move forward on ESG, I think we're probably one of the best projects out there on that basis. Look at the next slide. Upcoming catalysts. We say three. There's really, somewhat two. The urbanization certificate is broken out into two parts. One part is for the project, one's for the land. Essentially, this is the construction permit. We already have the full mining license in place by the state government, which is, again, was a huge de-risking event for the company. That was approved by, Minister of Environment, Waters and Forests, Economy, Finance, Justice, and the Prime Minister of the country. So that was a huge seal of approval for our project moving forward. So we expect that urbanization certificate for the project and the land to be substantially complete by the end of the year, early part of 2021, and hope to be able to make a construction decision towards the spring and get in the ground. We're also completing a Banco feasibility study. We expect that to be completed by the end of 2020, with a report out in early 2021. On a project that's an expanded project from what we put out in our PEA in 2019. If you look at the next slide, we talk about a stage development approach. Our PEA focused only on Kolnik. Gave us a nice project, 12-year mine life, capex about 339, including 265 million for the centralized plant. Excellent ASIC 752. But in the feasibility study, we're actually going to bring the Rovina deposit in sequentially to Kolnik, and that takes us to plus, call it almost a 19-year mine life in internal studies. So that'll be confirmed in the feasibility study. Initial capex should remain the same because of the Rovina project is sequential, but substantially increases the NPV and IRR, and it substantially increases the global production of gold and copper at the deposits. And that's again. Then we would look at Chirasata in phase 2. Again, that's only touching half the ounces in that first 20-year roughly mine life. So you're going to be here for a long time. It's a big deposit and certainly well suited for an open pit mine. And we look at the next slide, which is the last slide here. We talk about leverage. Why investors want to look at projects such as the Rovina Valley project and EuroSun. Gold's up 40% since our PEA, our NPV is up 300%. This is the leverage that gold and copper production give to a project like this. Big, large-scale porphyries are rare in first world jurisdictions. They're usually found in places like Peru and Chile and Ecuador. So having it in Europe with the infrastructure already in place, significantly minimizes that initial capex, and again makes this quite an attractive project for investors. So that's the EuroSun story in eight quick slides, but it's a simple story and one I think that investors should really pay attention to.
Brilliant, thank you, Scott. Very interesting. So to begin our Q&A, let's talk a bit about the history of the company. How was it that EuroSun first got involved in Romania?
Discovery. So this is a big difference from most of the other projects within Romania. I guess with the fall of the communism in '89, every mining project in Romania was state-owned. So in the early 2000s, this project was found by our team there. Went through the process of a prospecting permit first, made the discovery, went ahead and did the exploration permit, drilled up, somewhat like 160,000 meters on the project, the engineering, mining license application, and now we've moved into the final stages, which is the exploitation permit. So we are actually the first and only company that's not a state-owned to go through the entire process of discovery right through to exploitation, and as such, we own the project 100%.
So what is it in particular that's enabled you to become one of the first private corporations to achieve this? What's your edge in Romania?
Well, I would say more is our team is 100% Romanian. So I'm like the only expat, you want to call it that way, and everybody else is Romanian. They have a long history of mining in Romania. When they came into the European Union in 2007, they actually closed about 250 mines. So, it's been a long history of mining, excellent technical schools in terms of geology and engineering. So the ability to leverage, local talent versus bringing in expats like you might do in some other countries in Africa or South America is a tremendous advantage for us, and the successful part of it, getting it through the exploitation phase.
Yeah, of course. And you've talked about the regional infrastructure that's available. So the town of Brad obviously is very close. And I think I'm right in saying that this region was historically was one of Romania's most important mining regions. Is that correct?
Yeah, correct. Certainly going back, several thousand years to the Roman times, the Golden Quadrilateral, which they call it, produced, somewhat like 55 million ounces, what the expectation was. The town of Brad had an underground gold mine from the 20s up until 2006. Produced 13 million ounces of gold. All the infrastructure in place for that mine was and is still in place, including rail and roads. This is Europe proper. This is not, again, working in some remote location. You drive to the project on 4-lane paved highways, and I don't have to build camps. I don't have to build power stations. It's all in place. So that's dramatically minimizes what typically is a more expensive build for porphyry projects.
So we're looking at the map here, which shows that infrastructure. We can see the town of Brad over to the west. We can see the various connections to power lines, major roads, and of course your 3 deposits. Tell us a bit about the nature of these 3 deposits and what potential there might be in the future for further expansion through exploration.
Yeah, so these are fairly well-defined porphyry deposits, individual deposits. Again, the Rovina to the north is more copper gold. Kolnik in the middle is more gold copper, and Chirasata, which is, again, it would be an underground bulk mine, is more gold and copper. But again, that trend line they're only about 3 to 4 kilometers apart. So we have we've applied for an exploration permit on a property next door, which we've spent the last couple of years on doing prospecting. We think and we've identified a number of porphyry targets on that project, and that process is in place with the Romanian government. We hopefully would have by the end of the year a new exploration license on the Stănija property, which is only 6 kilometers to the east. And again, this would be for future growth of this project. This is a district, looks like it's multiple porphyry targets. But again, what the challenge is, and for the successful part of Rovina is get the project built. You can look at expansion down the road, but these are simple projects, 2-to-1 strip ratio at surface mining. Big and dumb is really what you want to classify these projects as. Move enough dirt to make it economical and inexpensively. So that's our target here.
Yes, I suppose the key word there is inexpensive, and we'll stay on this slide for a moment while we look at the proposed plant position. So if we go back to that slide, so we can see that the plant position is broadly in the middle. So I think, am I right in saying you said that the new project is about 6 kilometers away? Is that to the northeast?
So Kolnik is only about, I think it's, it's kind of over a hill, so it's about 2 kilometers as the crow flies to the plant. And if you look at Rovina, it's about 3 kilometers, 3.5 kilometers to the north. So again, very close in terms of mining to move material. And again, the Rovina will be targeted sequentially after. So you're going to spend about 10 years on Kolnik alone before you even start looking at mining Rovina. So it's not a 10, 12-year mine life. This is going to be, again, targeting almost 20 years between those 2 open pits. And you still have a 5 million ounce resource at EuroSun to exploit, afterwards, plus whatever we're finding on the exploration permit next door at Stynesia. So again, long life asset, district scale, simple metallurgy, simple mining. This is what the advantages of this project.
Yeah, and we've just moved to the economics slide, which illustrates the figures that you were talking about. Now, of course, the PEA was released in February 2019, as we can see here, and you're expecting obviously an updated feasibility study a bit later this year, which will include Kolnik and Rovina. Talk us through a bit more again, the economics relating to the project, and again, focusing on this word inexpensive. This is obviously part of your pitch as you talk about your all-in sustaining costs of being only $752 an ounce. How are you going to achieve that?
Well, we've always fought I would say investors love high grade, right? Everybody loves the high grade mines, and high grade mines come with usually, they're usually underground. They usually come with higher capex, higher sustaining capex, which people always forget about. Development capex is always important in underground mines. Predictability is a challenge in underground mines with pinches and swells, and so you get good quarters and bad quarters. And there's a number of examples out there on the high grade kind of space. Porphyries are inherently automated teller machines. Once they're built, they're predictable, they're big, you move dirt in size. Typically we're looking 20,000 tons a day of ore. Some of them are certainly well above that in porphyry projects, upward 100 to 200,000 tons a day. So it's about moving earth and processing ore inexpensively. And we're lucky that here, even though we do have low grade, we do get excellent recoveries on the gold, almost 82%, and copper, almost 90%, producing a simple concentrate. Simple flotation process. Again, no cyanide, no wet tailings. It's dry stack waste and tailings. So again, simplicity is a key. In grade is only one factor in economics, and certainly in our case, the ability to have and leverage all that infrastructure that's normally not in place in a porphyry project is certainly available to us in the first world jurisdiction we're operating in.
Yeah, absolutely. And of course, the security being in a full EU country, that provides you obviously with an excellent legal jurisdiction to work in as well. We'll come back to Romania in a moment and the position of this project, but let's just stick with some of the fundamentals, the technical aspects of it. Obviously, it's a 10 million ounce resource. Around the world, there are plenty of million ounce resources. There are a handful of 5 million ounce resources, but not so many 10 million ounce resources these days. Just talk us through a bit more about the importance and significance of that for EuroSun, and the fact that you have what appears to be one of the world's few late stage development 10 million ounce projects.
Yeah, I think in our last run through, we were about the 14th largest undeveloped project in the world, and you could probably look at 6 or 7 that are ahead of us that will likely never be built, or certainly have significant challenges in building those projects based on size, based on jurisdiction. I think the project in Alaska might be on people's minds. We're talking about the Northern Dynasty project's been out there, big asset, but again, challenged environmentally. And I think the biggest potential for us here is we've dealt with the environmental aspect, we've dealt with the social aspect, and so our project is developable. We hopefully will be in the ground building in the spring. We don't have the challenges that even our own neighbor has to us, which is the Roja Montana project to the north of us, again, which is again 16 or 17 million ounces. So projects are specific. All have specific challenges, but large projects are few and far between, and projects that are simple, like a porphyry project, is again certainly what people look for in investment, particularly in mergers and acquisition perspectives, and also for let's say large diversified mining companies love porphyries because they're predictable. You just move dirt, and your costs are fairly predictable, and again, that's a significant advantage that we have here in Romania, that it is buildable, it will be built. We expect to build it, although that's never 100% sure. You might get taken out before then. But again, grade is only one factor. The government in Romania certainly is approved of this project, and the economics here is quite significantly positive for the project based on the size that we're starting off with.
So we'll talk a little later on about some of the success you've had over the summer, attracting in additional institutional investors and the money that the company has raised. But let's just stick again with the project for the moment. So you obviously just described to us the importance of a large-scale project, the economies of scale that you can achieve by, in your words, moving dirt. So even though your grades are regarded as being fairly low, it's a fairly predictable project to be able to plan for and prepare for and go through the engineering work. What other advantages are there of having sort of a relatively low grade?
I would say, it's always a challenge with low grade projects, but it's really the advantage is all of the infrastructure that comes with us here, right? So, we don't have arsenic, bismuth, antimony, so no deleterious materials in the concentrate. So our simple process, we grind, we float, we make a concentrate. That concentrate is nice and clean. It can be shipped to a number of local smelters. There's 3 of them within 500 kilometers of the project. It can go to the Black Sea port, of Constanta, which then enables us to open up the international markets to Japan or China. So the advantages, again, of let's say a low-grade porphyry project is predictability and predictability in costs. You understand that the more earth you're able to move, the lower your costs can be. So hopefully, somewhere down the road, you can look at an expansion of this project beyond the 7 million ton a year to maybe a 14 million ton a year project. You certainly have the resource to be able to do that, particularly with the expectation that we're going to find more resources at Stanija, just several kilometers away, so you can still maintain that centralized plant location. So again, you're going to be here for a long time. We've taken the environmental approach of dry stacking and no cyanide, which certainly is leading edge when it comes to mining now. And I think that's the advantage that we have technically with this project is simplicity, size, long life.
So I'm interested to learn a bit more about Romania as an operating environment. Now, as you told us in your presentation, the country joined the European Union in 2007, but EuroSun's been active in the country for slightly longer than that. So I imagine that Romania's application to join the EU, that had a bearing on the overall strategy that the company's pursued. Is that correct?
Yeah, I'm going to say yes and no. I would say that, one of the challenges that the mining industry had, in particular in Romania, was, a lot of that industry was subsidized as before it came into the EU. And again, as part of the EU, you can't provide subsidies to certain industries. So that was why there was a shutting of a lot of mines across Romania that were, kept in place, particularly only to keep jobs going. They weren't economic, including the Barza mine right in but again, you have a strong history of mining in the country, and so when we talk about social license, talking about the ability to bring a project to fruition, they understand the processes, they understand the prosperity that can come from mining. You walk through the town of Brad, there's monuments to mining, there's mine carts, there's jacklegs sticking out of rocks. It's a significant advantage to have a community that understands mining and understands the benefits that it can bring to a town, to a county, and to the country. We're Canadian, so we understand it more than anybody else. How the success of resources have been to give Canada where we are in terms of the prosperity. So ideally that's the same situation we have here in and around Deva County, Hunedoara County, and the town of Brad and our surrounding communes.
So Romania remains one of the less well-off members of the European Union, and as you say, it has the communist legacy from before the 90s, and then a number of years where it was still run very much as a state-subsidized country, much of its industry. How have you seen the business environment changing over the last 10 years? What positive developments have you witnessed?
Yeah, I would say, let's say twofold. One again is it's 2 steps forward, 1 back, kind of as we've experienced. Unlike many countries in Eastern Europe, like East Germany had a big brother to help it move along into into the West, and Romania didn't quite have that, so they kind of had to do it on their own, which is a testament to their success. The European Bank for Reconstruction and Development has spent a lot of money improving infrastructure within the country. Businesses have flocked to Romania in terms of tapping into that technical expertise. We're talking, tire manufacturers, German automotive companies, and such. Bucharest is a huge hub for information technology with the likes of Oracle and Microsoft. So you have a very smart population, very technically driven. So that's been, I would say, a big success story moving along with Romania. And mining has been, it was slow in terms of getting the process across. But again, our success is, paving the way, I think, for other companies to jump into that area.
Now, I know one of the things that you're particularly proud about with EuroSun is the company's ESG track record, and you've been on the record to say that the sort of quite deeply held ESG principles that your firm follows has been one of the things that's enabled you to make the progress that you have within Romania over recent years. Just tell us a bit about some of the lengths that you've gone to establish your ESG credentials in the country.
Well, when we went through the mining license application process, to give an example, all the community consultations happened all up front and were widely attended by all the local people, affected community, in terms of determining where waste dumps were going to be, where plant locations were going to be for sight lines, dust, noise, pollution. So the community was actively involved in all that process. Which is, I would say, somewhat not the norm in the mining industry. I think the decision for us to go down, and also government to go down the route of doing dry stack tailings and no cyanide, certainly we would be more profitable in a wet tailings processing mentality, because it is an less expensive process. And if we could use cyanide in our project, we would probably produce 10% more gold. But you have to balance the aspects of environmental, social concerns with profitability. And I think both the company and the state of Romania made the decision that no cyanide use was the appropriate path to choose. And dry stack tailings, certainly were the right way to approach tailings management on the process, particularly, we're talking a long life mine asset. The NGOs right now can only point to all the accidents we've had with mine tailings in Brazil and say to the local communities, do you want to have wet tailings anymore on this project or any other project? When you look at a failure of the size they've had in Brazil, and really dry stack tailings is the way the industry is going for the most part, and our choice to go that way gives us more costs. But again, at the end of the day, for the life of the asset, is the proper way to balance environmental and social concerns with profitability, both for us and for the state when it comes to tax revenue.
Excellent. So we'll stay on this slide for a moment, Scott. So for some of our viewers who might not necessarily know, tell us what are the specific differences between dry stack and wet stack tailings?
Well, dry stack tailings, you actually commingle waste rock and tailings. You employ filter presses to extract all the water out of those typical, wet fine tailings that come out of the back end of your processing plant. So we're not, creating a giant lake of, fine filtered sand, as it were, containing water like you normally do in a wet tailings facility. We actually squeeze all that water out. You commingle the tailings with waste rock. You encapsulate it all by through that commingling process, and you're stacking, a dry rock-based material along for the tailings. And you can actually, because you're doing that, you can actually remediate as you go along and remediate that dry stack tailings, as opposed to a lake where you have tailings for 30, 40 years after the mine is closed and have that long life legacy environmental issue. We don't have that in dry stack tailings. But again, it's more expensive process. It's more OpEx, it's more CapEx. So mining companies are, somewhat loath to spend that money, and investors always want to see the best internal rate of return and the lowest capex possible. But ideally, this is the appropriate balance we took in Romania, and I think it's the right way to do it.
Yeah, absolutely. So, I mean, you've obviously described for us there very succinctly about how you've sacrificed some of the companies or some of the project's potential profitability in the future. But just tell us a bit more about why this issue is so sensitive in Romania in particular. You've already touched on some of the disasters that happened recently that are well known, for example, in Brazil. But just remind viewers of what happened in Romania about 20 years ago.
Yeah, about 20 years ago, up and around the Roja Montana project, there were two separate wet tailings failures. So dams failed while there was a remediation process going on, and you discharged wet tailings into a tributary of the Danube River, which of course affects a lot of Europe, not just Romania. And as such, there's a huge backlash on any projects that would use wet tailings facilities and the potential environmental issues there, and also cyanide use in general. While it's not illegal in Romania, it is illegal in some countries in Europe, but it's not illegal. But it's just not a process that's well respected for whatever again reasons that have happened in the past. And as such, we've chosen to not use cyanide, to sacrifice some of that profitability to make a good project. But it could have been better for both us and the state in terms of getting more revenue from us. But this is the sacrifices you make to make sure you have a project that meets all the highest and best standards environmentally and socially.
And of course, what it's also enabled you to do is to essentially fast track some of the permitting processes that you've been through, because for a company at this stage, I believe it's been quite a quick process for you to secure the permits necessary for development of the mine.
Yeah, listen, it was the biggest challenge was getting that mining license ratified, which was again, a highly politicized process in Romania. You have to go through 6 different ministries to get approval. So not just in a lot of countries, you just have the Ministry of Environment signs off on your permit and away you go. In Romania, the process is Minister of Economy, Ministers of Finance, Justice, Waters and Forest, Environment, Secretary General of Government, and finally the Prime Minister. So all levels of government are actively aware and engaged in the process. And I think that is a huge difference for getting this project moved forward into the stage where we are now, which is now county level approvals to actually build the mine. So going through the process of just like building a house, we're providing documentation to build the project and start that process. Hopefully, opening ground in the spring of next year.
Excellent. Now, if we move to the slide that shows the company's current capital structure, one of the things that really caught my eye about EuroSun is that for a company of your size that's this far developed, you've got a relatively small number of shares outstanding, just over 169 million, with, of course, about nearly 51 million worth of warrants. How have you managed to develop Rovina Valley to the extent you have with appears to be relatively small budget so far?
Yeah, I would say that 2019 was an incredibly difficult year for attracting capital, particularly for developers. Whether it's retail investors or someone like Eric Sprott, who wrote several $100 million of his own money into explorers. The developers, we don't have those huge catalysts coming up. We're going to have a discovery of another hole or whatever. Like we're going to build a mine, so everybody knows you're going to spend money on capital, right, to move a project forward. Feasibility studies, permitting, these are expensive processes that are not exactly overly sexy when it comes to, let's say the retail investor, but are necessary steps to take a project through to production. And, certainly for us, 2020 has been a turning point in the capital structure in terms of attracting new capital, attracting new investors, and getting past let's say the lag of 2019. And again, for us, getting that final phase of construction permitting this year, followed by getting that our mining license approved by all levels of government, was a tremendous catalyst to move forward.
Now we can see in front of us to the right some of your key institutional shareholders. Talk us through who some of these names are. Viewers might not necessarily be familiar with them, and also more importantly, how you attracted them.
Sure, and I would say first and foremost was Ruffer, which is a large gold fund based in the UK. Again, part of a larger financial asset manager, Ruffer LLP. But the gold fund alone is roughly £1 billion, highly concentrated, running about 60 names. Most of those names are producers, and very few are developers. So that was a big investment. They came in for just around almost 10% in January of 2020. And then we had a large financing led by Sprott Merchant Partners and BMO, Bank of Montreal, in May, where we were able to bring in the other significantly large shareholders, which would be the Franklin Templeton Gold Fund, and again, the ASA Gold Fund. So these are certainly precious metal specialist funds. Franklin and ASA are both based in California. The Axios Gold Fund is a spin out of BNP Paribas, based in Paris, and APAC in Hong Kong. Again, a well-known resource fund for 20 odd years. So we've been able to attract global capital, which is important, not just North American based or Canadian based money. We attract money from Europe, from Asia, and from the USA. So that's again a testament to the strength of the project.
Excellent. So you've obviously just raised a touch over $22 million a little earlier this summer. If we move to slide 6, tell us a bit about how you plan to deploy that capital over the coming months and over the next year.
Yeah, certainly. We went out to get a little bit less than that in terms of make sure we kept the capital tight, but there was tremendous demand for the offering, so we upped the offering from 12 million to 20, and a little bit of an overallotment to take us about 22. But again, all that money is going into the ground to finalize both the urbanization certificate, which is the construction permit, and the bankable feasibility study. So, again, that gives us all the capital we need to get to that construction decision. After which we'd have to raise, somewhat 300 million plus to move the project into production. But again, we're well financed for let's call it the next 12 to 18 months. And again, our warrant structure is strong. Most of it, if not all of it, right now is in the money, and we expect that to come in as time goes along as well too. So well financed to get us through to that construction decision.
Yeah, so you talked a bit about the construction decision in the presentation. Obviously, you need to get your bankable feasibility study first. I mean, that's clear. But tell us what clues might investors look for to get some confidence that that final construction decision will be positive?
Well, listen, we have an upcoming public audience in early October in the local communities. Again, this is one of 50 that we've done already, but it's part of the process of the construction permit. So we'll have that final license or final audience meeting. We expect that to go positively, as they had done all the way along until now. The bankable feasibility study, again, we should have the numbers pretty much done by the end of the year and released, and people can see. And our expectations are that they'll be in line with what we had on the pre-feed. The PEA that we completed only in 2019. So the numbers haven't changed dramatically since then. We expect to have a bigger project because we're going to have a longer life asset by bringing Rovina in sequentially. But again, the local communities are supportive. The county is supportive. Everybody's working strongly, even despite COVID, move the project forward. The bankable feasibility study will help us finance the project. Again, you need that in order to attract debt or bank financing. And again, the trigger will be the approvals to move ahead on the project with the construction license. So I think investors are, two big catalysts coming, and should be a big de-risking event for the asset.
So let's focus a bit more on the project financing now. The capex requirement for a project of this size is relatively modest. What options will be open to the company for when it comes, assuming obviously that a construction decision is given?
Yeah, and certainly one of the advantages we have here is our capital structure is wide open. So we have not encumbered the asset with any royalties. We have not encumbered any streams on the project. No gold lines. There's no debt on the asset. So the full capital structure is open to the company. Certainly the European Bank for Reconstruction Development has been active in Romania, and certainly will look at an avenue for their participation in helping bring this project to fruition. Are wide open to us, particularly with our strong ESG principles, and the capital that's flowing into that market is growing every day. We're in the European community, so that's again a strong ability for us to attract debt, not just in North America, but internationally for the project, particularly let's say in the London market. So I think there's an opportunity here for us to raise about 60% in debt, and I would include streams and royalties as debt, as defined by that, and the balance in equity. And again, de-risking the event of getting this thing moved to that construction decision will greatly assist in getting the project financed.
And so obviously, I mean, you're looking then at a capex of around about $339 million. Now, I believe that Ruffer obviously is one of your investors. They typically tend to invest in much larger companies. Is that correct?
Well, and as typically does Franklin and such, these are, again, we're a $100 company, and I think Ruffer's put in roughly $5 million so far, and their fund is £1 billion, right? So, and I'm talking 5 million Canadian, so that's like 3 million pounds, right? So there's opportunity again, being able to attract that level of investment from institutional investors like a Ruffer, like a Franklin, like an ASA. They'd like to do follow-on investments, and again, we were lucky to get them in at this stage, and particularly hopefully they would be there for the next round when we move towards that production decision.
Now, in one of the pieces that Value the Markets has produced about you guys, we looked at what's called the Lassonde curve. If we could pull that slide up, please. Now, the Lassonde curve, in broad terms, this outlines how a project can develop over time. Just tell us a bit about where EuroSun is. So obviously, we've marked on this diagram a dot, which we believe, broadly speaking, sort of shows where EuroSun is as a company in terms of development of Rovina Valley. But tell us a bit more about that.
Yeah, and I think that's for all intents and purposes very accurate when it comes to describing EuroSun's rise and fall and back up again, and that's mainly a transition from retail investors to strong institutional investors, and having that strong institutional support come in May. They can see that they're almost the last money in. As you move up that development curve, you've de-risked it either through engineering or through permitting. We certainly have done through both with a very strong PEA and with a mining license ratification. And so I think that we're clearly on that uptick for valuation as we go through the next 6 to 8 months of permitting work and feasibility. And again, very few mines ever get built. There's thousands of explorers and developers on multiple exchanges around the world, the Toronto Exchange or New York or London. Very few get built, and in this case, all intents and purposes, this will get built. The expectations there, the government support is there. Clearly the financial support is building for that to happen, and I think we're on the uptick for that on that second leg off the bottom of transitioning from retail to institutional investors, and clearly our last round of financing demonstrated that.
Yeah, exactly. I mean, it was a huge vote of confidence that you were not only able to raise as much as you did, but also attract in the caliber of institutional investors that you managed to get on board. So let's just talk a bit about your pitch, or a big part of your pitch for the company moving forward is that EuroSun offers high leverage both to the gold and copper prices. Walk us through that.
Yeah, our revenue stream is roughly 70-30 gold to copper. We produce a 22% copper concentrate with about 100 grams of gold, so that's classified as a high gold grade concentrate. Very attractive to smelters. So we look at gold price up 40%, but a project like ours is up 300% in terms of the NPV because of that leverage to gold price, and that's really the case when you see large scale projects. And I think what should attract investors is our valuation is still has not achieved what our expectations are, so relatively low compared to some of our peers. Some of our peers are vastly overvalued based on the same kind of metrics. But we've been dealing with slow and steady uptick in our share price. We think there's a lot to go before we even can achieve that construction decision, and de-risking a project is an expensive process. It's a challenge. We've been extremely successful in getting it done, and we continue to work as hard as we can to get those last two catalysts across the line. So leverage is big. You want to see projects like ours come to fruition, and again, makes it an attractive even M&A perspective when you're getting close to the final time to build. Is typically when projects are getting taken over. So there's, I'm not saying that's going to happen, but that's typically a larger company would look at it and say, okay, a single mining asset company, they've got now the ability to build a project. It's time for the larger company to step in, and that happens more often than not.
Yeah, we'll come. We'll talk about that in a bit more detail in a moment. But let's for now just stick on gold and copper. Now, obviously, the gold price has recently breached all-time highs. It's hovering around the $2,000 an ounce level. Base metals have also started to move very favourably. The market, I think, is expecting a post-COVID infrastructure boom. Tell us a bit about the breakdown of copper and gold at Rovina Valley, the split between the two, and how that impacts a bit more on the fundamentals of the project.
Yeah, and again, it comes down to what do we produce at the end of the day. So we're about 7 million ounces of gold, about 1.5 billion pounds of copper in the project. That gives us in a production scenario in the PEA roughly 70% of our revenue comes from gold and about 30% from copper. Every 10 cents up on copper is another $20 million of NPV. Every $10 of gold is another $30 of NPV on the project as well. So highly levered to both metals, more geared to gold, but copper, again, the expectations is that copper is going to be a strong market for the next several years. We utilized $3.10 in our PEA 2 years ago. Copper fell off in the last couple of years, but we're back almost to $3.10 already. Meanwhile, gold has gone up, roughly 40% in value. So that had a huge impact on our net present value. And also considering that what we show here on slide on slide 8 is only the Colnick deposit, right? So we don't have an economic report out yet on the feasibility study, but we expect it to be significantly higher than that based on the fact that our mine life is going to be significantly longer in the project. So again, that's $684 million at 1868 gold and 298.2 copper. Well, it's actually higher than that now because gold is higher and copper's higher, but I think you're looking at long-term metal prices and copper prices, gold and copper, look to be strong for the next several years and should be an advantage for the project.
Excellent. Well, that segues very neatly into the last thing I'd like to ask you a bit about today, and of course, that's the potential for a share price re-rate. Of course, viewers, that's what we're most interested in. We want to put our money into companies that we think have the potential to deliver a multiple return. Let's just start with a view of some of your peers and how Rovina Valley and by extension EuroSun is currently valued, and why you think there's an undervaluation case for your company.
Yeah, I guess I'd look at two aspects of the project. One is country risk profile. There is another project owned by Gabriel Resources called Roja, Montana. That was a project that was unable to move forward on the production scenario for a number of reasons, in terms of big relocation of people, wet tailings and cyanide use, of course, is in their process. UNESCO World Heritage Site for Roman ruins. So that was the challenges for that project, and it's kind of painted Romania as a jurisdiction that's anti-mining in a lot of people's minds, and clearly that's not the case, as the government has just approved our project. And our project by size on a waste to ore basis is the same size as Gabriel, so it's a large scale bulk tonnage project. Every country in the world has a project like Roja, Montana that doesn't go ahead, whether it's in Canada, the US, Colombia, Chile, whatever. Every country has a specific asset that may or may not go forward. So I think that's some of the challenges to our share price. Grade, I think, is what people look at in terms of They don't understand that 6 of the 10 largest gold mines in the world are all sub 1 gram. Moving dirt inexpensively can be extremely profitable, particularly for long life assets, particularly when you have a capex that's relatively low. Everybody forgets about sustaining capex in mining, which in underground mines, which are typically high grade projects, those are ongoing costs that are continually put back into the underground for development of new stopes. So, I think that's the view is grade jurisdiction has been the 2 big issues, and maybe the lack of a, let's say a big brother like an Eric Sprott or a big institutional shareholder or a strategic has been some of the views where shareholders have shied away. But I think that's changed in terms of getting those particular shareholders into the investment back in May, and again close to completing 2 significant de-risking events should be a significant positive to the share price going forward.
Absolutely. And if we just look at the valuation case at the moment, I believe that Rovina Valley is currently valued around about $5.30 in Canadian dollars, obviously, per ounce. Is that correct?
I guess I think it's closer to 10. I guess now.
That's close, right?
We're a high company and we're 10 million ounces, so pretty close to $10 an ounce. Enterprise value. So I think that finding costs today are $80 to $100 an ounce in the let's say the Tethyan belt in and around our project. They're closer to $50 an ounce. So I think we got a long way to go in terms of what the valuation curve. Some of our peers have blown through that incredibly based on who their shareholder base is. And I think that's the challenge for us, is just to continue to show that we have the government support. This is not a project like Roja, Montana. It's simple, it's cost effective, it's big, it's scalable, and it's being de-risked to the point of starting construction, which again is doesn't happen every day in our business for sure.
Excellent. Well, Scott, thank you very much for your time today. It's a very interesting presentation, and thanks for being so forthcoming in your answers to the questions that we've received. And we'll look forward to having you again on our show soon.
Thanks very much, Ben. Pleasure.